What up, y'all? So in this video, I'll be going over SMT. So what is SMT? SMT is a divergence between two correlated pairs. So right here, you can see these two charts, and let's say this is NQ, and this one is ES. Okay, so what is the difference here? As you can see on NQ, we took this high, we had this lower high, and then we made a higher high. And then on here, we had this high and made a lower high. So this is our SMT. Our SMT is this right here. It's because on NQ we took out the high, but on ES we didn't. So right here is our SMT. And so if you are a turtle soup trader like I am, you would trade this one because this would be the turtle soup right here. We would have our turtle soup right here, and then we would trade that to go short. So this is a bearish SMT. And then you always want to pair SMTs with a higher time frame PD array. So it would look like this. You have your SMT tapping inside of a higher time frame PD array. So our key level, it will be the same here on ES. This is the highest probability SMT is when we are inside of a key level. So once you see this, then you know price is either going to be bearish or bullish. But like for this instance, we're going to be bearish because we had a higher high on NQ and a lower high on ES and turtle soup. So this is what a bearish SMT looks like. Now let's go over a bullish SMT. A bullish SMT would look like this. We have the low and then we had a lower low and then we shoot up. So let's say this is NQ again. And this is gonna be ES. We had a low and then we had a lower high. So it look like this. So boom. And then we tap inside of a key level to make it the highest probability. So it'd be like this. Key level, key level, and then our SMTs are right here. Right here. Boom. NQ took this low. Wow, ES didn't. So this is our SMT right here. So SMT equals expansion. So whenever you see an SMT inside of a key level, just expect an expansion. But your bias has to be correct though. So SMT, you should have your bias, and then the SMT confirms your bias actually because we're inside the key level, and then it lets you know where price is going next. And so yeah, it's pretty easy. Let me know if you guys have any comments. Any questions in the comment section down below. But let's go into like some real charts. All right, so we have this example right here, and this is literally this morning's price action. And as you can see, on NQ, we took this low, but on ES, we didn't. So this was our SMT right here, and we also had turtle soup. So boom, this was the turtle soup, and we tapped inside of a key level, which is we tapped inside of a 4-hour higher time frame key level right here. So, and as you can see, price expanded. Yup, price just went straight up. And this is a bullish example. Now let me find a bearish example. Oh yeah, this one right here. So boom, as you can see, SMT key level, but on ES we didn't take out that high right here. You see? Oh, on ES we did take out the high. Yeah, we took out the high. This high on ES, but on NQ we didn't. So took out the high. Boom, key level right here. This SIBI, this 1 hour SIBI is our key level, and as you can see, price shot down, expanded. SMT equals expansion. So I suggest everyone to start implementing using SMT divergence in their trading. It will really boost your win rate and it will filter out all the, like unnecessary losses. But that'll be all. Let me know if you have any questions in the comments.